Having access to real wealth seems so effortless for a lot of people, and the truth is, there's so much money to be made in the stock market. And this money, most of the time, is literally sitting right in front of you, just waiting to be collected. And the best part is that you don't need to spend hours every day obsessing over numbers and technical analysis. All it takes to acquire it is having the correct systems in place and knowing which mistakes to avoid. I mean, do you ever feel like you keep making the same mistakes with investing? So one of the biggest mistakes that I made was something that cost me $50,000 of potential gains. So in this video, I want to share with you what mistake I made and what you can do to avoid it. So yeah, this is one of those stories that hits hard, and it's not just because of what happened, but it's because of what it taught me. And the funny thing is, this wasn't some massive reckless loss that I took in my portfolio. In fact, it was actually a win overall, but it was a win that should have been so much bigger. So if you've ever felt like you were so close to doing something right, only to look back and realize that you left life-changing money on the table, then yeah, this one's for you. So let me just set the scene for you guys. A couple years ago, I made what turned out to be one of the best calls of my investing career. I invested in a little quantum computing company called IonQ, and I was talking about this stock on my channel when it was $10, and I was still talking about it even when it dropped to $5 a share. And I think a lot of people shrugged off this company, figuring that real quantum computing was too far away. Plus, IonQ wasn't even a profitable company, so why take the risk in investing in it, right? So while others ignored it, I did my research, and I felt like I understood the narrative pretty well, and I had the belief that this thing could change the world in the future. It was a bet on technology that could reshape how we solve problems in chemistry, artificial intelligence, logistics, and a bunch of other fields. So I bought in early and positioned myself in the stock. Or so I thought. So here's where it gets frustrating. IonQ didn't just do well, it exploded in value. The stock shot up over 800% from where I bought it. And you know what I did? I trimmed my position. In fact, around the 400% mark, I thought, wow, this is amazing. I should just lock in my gains before they disappear. So I sold a chunk, thinking that I was being disciplined. But all I was really doing was capping my upside. I turned a generational opportunity into a modest win. Because if I had been buying the stock on a weekly basis and used the exact same methods that I was using for my position in Palantir, when all was said and done, that decision with IonQ cost me over $50,000 in potential profit that I could have made. Now let me be clear, this wasn't about greed and I wasn't trying to chase some unrealistic gain or something. The mistake wasn't that I trimmed too late, it was that I trimmed too early, and that my position was way too small to begin with, and that really stung. My portfolio didn't reflect the level of conviction that I had, and that disconnect between belief and position sizing is one of the most common and expensive mistakes that an investor can make. And look, I'm not here to tell you to YOLO your life savings into one stock. That's not the lesson here. The lesson is, if your high conviction ideas aren't the most meaningful parts of your portfolio, you're never going to experience asymmetric returns. In fact, you can hold a winning stock, but if it's only 0.5% of your portfolio, who cares? A 10x return on a tiny position is just a tiny win. Meanwhile, your biggest holdings might be in a company that you've barely researched, just because they felt safe, which isn't really much of a strategy. I wish someone would have sat me down earlier and told me, sometimes the mistake isn't picking the wrong stock, it's treating the right one like a side project. And that's exactly what I did with IonQ. I knew it was special. I felt like I understood the technology and the roadmap as well as a normal person could. I even had a timeline in mind for when things would start accelerating. But because I didn't have a real framework for sizing positions or holding with conviction, I basically sabotaged myself while being right. And that's exactly why I built a framework for myself that I use now. It's based on several factors, but the main components are conviction, narrative fit, and asymmetric potential. It helps me know how much to allocate, when to hold, and most importantly, which companies actually deserve my attention. And this has really helped me simplify my portfolio, hold fewer stocks, and focus on bets that actually make me huge returns now. And here's the truth, I'm sure some of you guys are probably doing this too. You're watching winning stocks run from the sidelines of your own portfolio, and you're celebrating 2x returns on tiny positions, while the real capital sits in index funds or stocks that aren't really going anywhere. And you're not alone, because I was in this position. But it's completely fixable if you start getting honest with yourself about how you allocate and why. So if you're sitting on a portfolio that doesn't reflect your actual beliefs, maybe this is your wake-up call. Don't make the same $50,000 mistake I made. You need to build with conviction, allocate with intention, and give yourself the chance to win big when you're right. Anyway, if you like this video, make sure to leave a comment and maybe we can have a discussion. Let me know if you've ever trimmed too early, or maybe you've misallocated on a stock that you actually believed in. Also, if you want to see the system that I use now to size my positions and build high conviction bets in technology and other high growth industries, I break it all down in more detail in this video right here, so be sure to check it out. Anyway, thanks for watching, and I'll catch you next time.